Good day. This is the Eye of the Storm podcast with the weekly update for the S&P 500 being recorded on Saturday, July the 6th, 2024. Even though it was a holiday shortened week, it was pretty dynamic in terms of the gains made in both the S&P 500 and in the NASDAQ 100. More substantial in the NASDAQ 100, but the S&P via the futures market has started to move above 5,600. Now, in the cash market, we got to close at 55.67. And so I think it's like 5,600, I believe, is going to be tested. I can't say with definitive answers that it actually is going to move above 5,600 more substantially at this stage. I think that the market is still very much due a little bit higher degree pullback, which would make it more significant in terms from where we are to where we're likely going to end up. So it's more of a 5 to 8% possibility now, and that would come in the form of what I'm counting as a minor fourth wave decline. So just to take a quick review of the larger picture. In October of 2022, we completed primary wave 4. So that puts us in a primary fifth wave up, and it still has additional to go. So within that primary fifth wave, it'll consist of 5 waves of intermediate degree, of which we've only completed 1 and 2. So we remain within intermediate wave 3 of the primary fifth. Now, going on from there, within intermediate wave 3, it will consist of 5 waves of minor degree, of which we're finishing up minor 3. So what we're really going through on an Elliott basis is that we're going through a 3 of 3 move. So it's minor 3 of intermediate 3. That in and of itself, on this degree level, is the largest, the strongest, and the longest section. And it's certainly proving to be just that. Since it basically, on an intermediate degree, this third wave began in December of 2022. And if we're going just down on a minor degree, the minor third began in March of 2023. So this has been going on for over a year for certain. And I believe what we're coming up to is a minor third wave. Now, what that implicates, or what the implications of that are, is that we're going to have a minor fourth wave correction. I believe it will be, as far as us as traders, whether you're a day trader, a swing trader, a position trader, it's going to be a large enough move where you need a move that you need to pay attention to your positions, number one, and if you're intending to do certain things to make adjustments to a portfolio. As a swing trader, time-wise, yeah, we're looking for it to actually kick in, which will set up some nice trades. As a day trader, I can wait it out, although I'd like to see it start because I think that there'll be much stronger follow-through opportunities to build on a trade. Now, having said all that, we're still within, I believe, the final stages of a minor third wave. And within that, we come down a degree. It's a minute fifth wave. So here's the minute, 1, 2, 3, 4. We're in minute wave 5. Inside of minute wave 5, I'm going to bring it down to the daily chart. On the daily chart within minute wave 5, we'll have 5 waves of minuet degree, of which we already have 1, 2, 3, and 4. Slight change to how I'm counting my minuet wave 4. A little bit of that extension, which I think I've already presented, where the minuet wave 3 did extend. And then the 4, I actually moved down. So I'm going to come down off of there. So again, what we're inside now, remember, we are in finishing a minor third wave. We are in the minute fifth wave. And within that, we're within the minuet fifth wave. Bringing it down again, I'm going to go to the 4-hour chart. And you can see, let me just take it down to the hourly. So here in the hourly, the fourth wave, actually I had placed, actually in the S&P, it was always been right here. But so it stayed in place. It was the NASDAQ that turned into a running fourth wave. So again, in the S&P, pretty clean, and then it was a B. So that's a little bit different because this really comes out to be an irregular B wave within an ongoing 4. And then it comes down, puts in that 4, puts in a new low below A. So that all worked out. And then I put the 4 here, and we're in 1, 2. And what we just finished on Friday was sub-minuet wave 3 of minuet wave 5 of minute wave 5 of minor wave 3. So I know it keeps extending, but look at what it did. From July 2nd to July 5th, look what it did. It went from 54.50, what was the low? 58, 54.58, and it topped out on Friday at 55.70. So, and guess what? So this was, it started on July the 2nd. July the 4th, the markets were closed. So really, in 3 days, that's what it tacked on. And that was with a halfway decent sell-off in a couple of points. Where you're like, okay, maybe we're into that a little bit more of a correction. Like here, I thought we're into this correction. Nope, it extended. And again, volumes were not extremely heavy, but they were heavy enough to kind of, put a mark where we're going. Now, so has my position changed in terms of that I'm still looking for a minor third wave to complete? No. So I'm going to go back out. I'm going to go further out, go back out to that weekly chart because I'm going to talk about it, and that I'm looking for this minor third wave to complete. And I believe we're in those finishing stages. I will go over that in just a moment to put the extended fibs into play here. So again, what I believe we're finishing is that minor third wave. What will the result be? It remains the same, whether we finish close to where we are or whether we actually do go up and break 5,600, but not strong enough to sustain a continued climb. So I think we may go up, get above it, test it. That's basis the cash. And I believe really what they're going for is they're just kind of knocking the call wall up. 5,600. They go and test it, it's going to get pushed to 5,650, maybe even to 5,700. And it just puts a target out there for, just traders. That's the part that they're going to go and test. And who's ever there will see what they want to do, etc. So again, technically, it sits there. I believe it will be breached, but I don't believe that it will move up to that next level before we get that little bit bigger of a correction. I think eventually that upper level, that'll all get taken out. But now, so I'm looking for that minor third, come down here into the price territory of the fourth wave of one lesser degree, which will be the minute. That's already in place. So again, we have the potential to drop down, and on our top side, the top of the box is at 52.65. The bottom of the box is at 49.53. So we have a pretty large window for which this minor 4 can drop down into. My initial feeling is that it'll come down towards the low. That's the April 2024 low. Came in right before and at expiration. The expiration for April. So we've now rolled and we've had the June. So it's actually March, June. And if it goes April, it's April, July. So I think that the cycle might just kind of push us. And if we roll out further, then it's going to be May, August. So in terms of just the way that the expiration cycles work. So I think that would also, just speaking of expiration cycles, the market, particularly SPX, the NDX, all of them are very heavy and all the way down into the underlying, right? So all of the component stocks, that it's heavy calls. So there's been a heavy call buying. And what I've noticed is that is also, it was big for June. So we're running on that June, September December, so June, September, December cycle. And on those quarterlies, we had a very large June quarterly expiration. And so, and that came after an even larger June 21st, which was the monthly. So we had the monthly, and then on the 28th of June, we had the quarterly. Both were pretty large in terms of notional value, in terms of what got released back into the market via cash. So then it rolls, and we have building, but not as large. We have a fairly large July monthly. But if we move all the way out and we take a look at September, September is pretty large already, call heavy in September, and December, same. So the current trajectory of the market would lean towards going up. And there's very little, when we check to see what's underneath the market, very little. So in other words, the surprise will come if indeed we do start to correct in a minor fourth wave. I think we will see some initial stronger selling, because there is a tone change. It's going to go out a little bit more, and that affects this whole flow of where things are sitting at the moment. So we'll see some changes. And again, that will kind of back up and propel the correction. So that's why I want to just leave that out there to say it's just a correction. Minor degree, but it's just a correction. So what comes next after we get this minor 4 is we get a minor 5 back up. And that minor 5 would be expected to move again to new all-time highs. So wherever this ends up, the minor 5 would be expected to break it and continue higher. Now, we have further out fibs that do suggest we could get to 6,000 to 6,200, whether that's going to be September or whether it's going to be December. I do kind of see it kind of fulfilling that goal towards the end of the year. There are a lot of things that can propel it. There's a lot of things that can really interrupt it. And then understand that if that gets interrupted, it's going to throw a lot of gamma and delta and all of the Greeks that sit out there that people are choosing not to understand. But if you're looking at options flows, that's money. Money is flowing from different entities. And when changes come to the market that reflect back through gamma and delta, that's money. And money's going to get shifted. And because as the positions require the shifting, whether that's selling stock or whether that's buying stock, it's going to happen, and it will, of course, affect the movement. And things can build in here as well. When we start to look at, just technically, we're looking at the technical indicators. They are beginning to register more strongly. Here we are in the weekly, and we're back in to being overbought. And as soon as it turns red, it would be considered extreme. Now, we made a new all-time high of significance on an RSI basis. The high in the RSI came in April, right? There, it's the April. That was the high RSI-wise. So the strength in the market, a lot of it evaporated going into April expiration. So, and that was reflected. Now we've come back up another new all-time high, less participation amongst the 500 stocks. So we're narrowing the field of what is going to put the highs in. And it's been relegated or just taken down to a more even select group of stocks. And they happen to fit into artificial intelligence, which remains the talk of the market, that this is what's going to lead the economy forward. And they're starting now. And to me, it's like, well, there's a lot of things I believe that have to happen before AI is totally rooted and supplying enough to the economy to carry it. So might happen, might not happen. Anyway, back at the ranch, there are a lot of things that are sitting out there that can change the overall direction of the market in terms of the flow, of the options flow, of the capital flow. So, and it could shift within that from one side to the other, from the long side to the short side. And how can it show up in the short side? When we start to see a reversal where they start buying the put instead of selling it, where they start selling the call instead of having to buy it. When that, you're going to see positions reverse, and that's how we'll start to see it. But it's also a flow of capital. And if that flow of capital puts the burden of the market to actually be long puts and short calls, then it's the same that they were buying the calls. They're going to have to sell the call. And they're going to have to buy the stock while the dealers end up selling it. And so dealers will push a lot harder than the broader market. So we could see a shift. We could definitely see a shift, and it will all fit within a minor fourth wave. But once again, I wanted to just make sure we understand it's just a correction. So we have a minor fifth wave back up, intermediate third wave then complete. So we have another decline in the form of an intermediate fourth wave. Lots of shocks still that can affect the market. Things continue to move along. We have the narrative and then we have reality. And when those two don't meet, one will shift. If reality shifts, the market will react. If the narrative shifts back, the market will react. The narrative is hope. Reality is real. That's what's happening right now. So market tends to have to shift. Now, I want to bring this down. So let's talk about where we think where it can go. And I'm going to take it down to the daily. We can look inside. There is that minute fifth, minute four. So we're in the minute fifth. Inside of that, we got minuet 1, 2, 3, and 4. We're in minuet wave 5. Bringing it down again, right to the hourly, because that's where we need to get inside. So there's minuet 4. We're in minuet wave 5. And inside of it, look at that third wave, folks. It just really extended. Again, this is July 2nd. This is July 5th. And the 4th was a holiday. So in 3 days, massive. Again, expiration. We had the quarterly on June the 28th. A week later, we just have a normal weekly, but boy, was it call heavy. But maybe it's like getting out of these calls. I'm not sure. So that's why I want to see how this all flushes out coming into Monday. Right now, though, on a fib basis or just on an Elliott basis, I think that if we finish the third here, there may still be a little bit of follow through here on the cash because the market tended to follow through a little bit, that we could get a little additional pop, and that would be nothing more than just completing this third. It'll change the levels, but I don't think by very much. I'm not sure if the SPX really wants to go up and test 56 before it corrects in that bigger level. But maybe. We might go do it now, but that could be 3. I don't know. I need to get that 4 in. And we might not until we get above. So we have to leave open the possibility we might start from above 5,600. Give that a test now. Drops back down below, and that still could be a small 4. We go up in a fifth, retest that area, but that fifth then finishes up the minuet fifth, the minute fifth, and the minor third. I still believe we could get up there. We could futz around up there for a while, but I think it could contain it before we get that minor fourth wave correction. Now, upside, what do we have thus far that could give us some clues? Well, we have the minuet fifth wave, 100%. So again, using the fib that we have, that we compare the fifth wave to the first wave, and that would suggest, and then equality is the number 1, and that's 100%. And that is 56.16. So you can see how I believe we're going to go test it. Now, above that, on the minor level, now, yeah, it's pretty big. It's up there. It's 4.236%. So that this minor third, this finishing minor third, does project out to be actually 4.236 times the length of minor wave 1. So again, keeping it in a Fibonacci relationship, but it's out there. But again, degree-wise, it fits. So that's 56.34. Cash, 56.34. So again, there's the window. Now we might get, I think, so this third could extend up, but then again, it could be we get the fourth and then the fifth, I think comes up and tests that 5,600 level. And then we finish minor three and we drop down. And again, that's going to take more time. I don't think it's going to be, I think it could move fast, but I think it's going to take more time to get us out into here. That's a lot of correction. And I believe it's going to have some type of a stimulus. Something is going to stimulate the market to change maybe for the month of July, maybe for the month out to August. So you have to go, so yeah, a lot of stuff, but we can put it all together. Now, again, I just want to say that next week, in terms of numbers, we have on Monday consumer credit. I'm not too concerned about that. It's going up. Consumers are continuing to spend money. Everybody loves that. Put the consumer into debt. So on Tuesday, Fed Chair Powell testifies before the Senate. On Wednesday, we have wholesale inventories, and at the same time, Fed Chair Powell goes over and testifies before the House. All ears are going to be on what he tells the government. I don't suspect this is going to be anything other than the regurgitated thing he gives to the public every time we have a Fed meeting. Now, but it could have a pull on the market, right? Remember the narrative. Narrative is not necessarily reality, and the narrative is moving forward. What can we hope for? And then we have reality, which is this is what's really happening. Two factors. Market reacts on both. If he continues to grease the wheel and everybody appears happy, then suspect that the market's going to stick to the hope. On Thursday, we have consumer price index and initial jobless claims. So we have CPI, and then on Friday, we have producer PPI. So, and consumer sentiment. So we do have a fairly active calendar in terms of what the market can do. Moving averages on the daily, they are not bad. In fact, they continue the daily. There's the 13. It is still heading higher. The 20 still heading higher. What is going to give us some confirmation on the daily chart is if the market comes down and breaks 54.50, or if we continue to rise, so will that indicator, the 20. But with the 20, if they turn and break below the 20, it should start to signal that we might get a pickup in the selling, but it also that the top may be in for that minor third wave. It's on the daily chart. The 50 would give us pretty good confirmation if it breaks below 53.27. And then, of course, you have the 200 at 49.95, which it just happens to be right now on the daily, pretty much right where we're looking for it to bottom in a minor four. So we're just looking for this minute wave 5 to be corrected. That's all we're looking for right now in the form of that minor four. All right. Over in the futures market, same kind of deal, right? But a little bit, this is the daily. So again, same count. If I move out to this, we have, there is the primary four, 1, 2, 1, 2, 1, 2. We remain within the minor third wave. And within it, we're in minute wave 5. And within that, we are, I'm going to go straight down. We are in minuet wave 5. So we're in minute wave 5 now, minuet wave 5. Let me just pull it out. I'll show it to you. Then we have 1, 2, 3, 4. All right. So here's minute. And then we have 5 waves of minuet, 3, 4. We're up and we're into that 5th wave. And 4 completed also very clean. Now we're in minuet wave 5. And it is just projecting out. I'm surprised that I don't have that labeled, but I guess I did on one and I didn't do it on the other. So what I'm thinking is that we have 1, 2, 3, if anything. 1, 2, no, I'm thinking that this is 1 and this is 2. And then we're in 3. So I am going to put the 3 up there. And what we can project is that there is the possibility of this in terms of a pullback. And I will, sorry about that, guys. But I'm this far into it, so I'm not going to restart. I'm just going to go ahead and put these fibs out there, and so that we can take a look at what levels to come down and then what levels going back up are already in existence. So here we have the pullback. We have 56.10. Mind you, we got up to, on the futures market, we got up to 56.26. So still the possibility we may get up to 56.50, to be honest with you, in the futures market. So, but coming off 0.236, 56.10, 382 more normal, 5,600. Gee, what a drop, 15 points, and then we run again. So if I'm putting my 3 here and this turns into a 4, a smaller 4, interesting. But that's what I would expect. If not, then it's 1, 2, and then 1, 2, 3, or 3, 4. Could be a 5. The 5 could be done. It's just, that's how strange the futures market is. I don't think so. The cash market also, but does look like we're giving the benefit of the doubt to the 4, and then we got one more little pop. Now, if I move this out and we're looking for that completion for minuet, we have that 100% at 56.64. Now, even with the premium, it kind of puts the cash market above. But what comes after that? I mean, we'd have to have a serious upward explosion in the market, in my opinion, because our next fibs are on a minute level, 57.60, 57.58. On the minuet level, 57.63. That would be pretty intense, but who knows? Who knows? Is it possible? Yes, technically, I'm showing you it's possible. But it would be quite the extension within these fifth waves. This is more realistic to me. This is out there, could be narrative, but this one is where I see the stronger possibilities. And then once we do get a small 4, I'll run it, and that's likely going to show up again right around in here. Moving averages are also the same as in the, just a little bit different in terms of level. But here we have 13, here we have the 20, and the 20 is at 55.16. Again, on the daily, if we start to break 55.16, it's going to give us a little bit stronger point that, okay, maybe we're already starting that minor fourth wave correction. And then a break below 54.09, well, it's going to start to wrap it up a little bit for us. Now, again, pulling this open and looking here, we have the fourth wave here. So the window is right here, and it starts at 50, basically 5,400, and it runs down to 50.27, 50.28. That's on the futures basis, and that's actually basis the September contract. And I think we can get my minor 4 into play, and maybe even done by September. But I think September expiration is still, being that a so-called heavy, may remain that way. And so that likely will push it back higher for that September expiration. Anyway, that's kind of what I'm looking at right now. I'm going to finish it up there. The next Elliott Wave daily update will be on Monday, July the 8th.